Welcome back. You're watching IndianOpen right here on BloombergQuint. Quick check on how Asia is faring, and flattish moves largely for most of the Asian indices, save for Hang Seng, which is down 1%, and that index has isolated issues of its own. The others are trading very, very flat in the session today. The SGX Nifty 2 indicating a start which is, well, flat. It was up about 16 points, now about 12 odd points. We might have a start which is very, very flat. It's difficult to gauge that, but the pressure on the indices stays simply because yesterday we had a big crack in the second half of trade, more so in the banking space, and the market breadth, as we said, in the trade setup as well, ended at the worst possible point of the day. How's the derivative picture looking like on this very important options expiry, weekly options expiry day? Navneet is waiting by for that. Navneet, morning.
Good morning, Neeraj. Well, the markets closed at two-week low yesterday, and it seems like the macros are now weighing on our markets. You also saw the rupee moving towards the mark of 72. But looking at the data points, the Nifty futures definitely witnessed some amount of fresh shorting as the open interest went up by about 2%. But for the bank Nifty, which has been outperforming in the recent past, yesterday did witness some profit booking. There was a long unwinding scene as the futures shed about nearly 9% in open interest. And looking at the options data, the Nifty PCR fell closer to levels of 1.08 compared to 1.28 that we saw in the previous session. That was owing to aggressive call writing that came in the last hour of trade. And of course, there was some put unwinding scene as well. So for today, this is the open interest distribution. Maximum open interest on the call side remains at 12,000 mark, while at the put side, the base now has moved lower by 100 points. It is at the 11,800 strike. In terms of activity, as I mentioned, there was more of called writing. So out of the money strikes like 12,000 as well as 11,900 saw addition, whereas put writers of 11,900 ran for cover. And also for the lower level put strikes like 11,600, you did see some bit of unwinding. Today being the weekly options expiry day, I think 11,750 is the 20-day moving average on the downside, which you should watch out for. And on the upside, 11,900 will remain key for the traders. In terms of individual stock futures, we did see some long positions coming in for MGL, which reacted positively to its numbers. Sun TV was down nearly 11%, shorting seen post week set of numbers, and Equitas second straight day of losses, fresh shorting seen for that counted. In fact, after 2.5 months, we've got a stock coming in the F&O band. So that's Just Dial, which was down 7% yesterday, did see fresh shorting, and the stock has also entered into the F&O band. Very quickly then on the FI front, though the buying continues in the cash segment, but there was some bearish data points from the futures and options space. On the index futures, they build up more of short position, nearly 45 contracts were added there, while on the index option space, we did see fresh addition coming in on put long as well as call short, while the long positions did see some bit of unwinding. With that, it's back to you, Neeraj.
Thanks a lot for that, Navneet. So those are well, some indications of what the derivative space is indicating, and some interesting names out there and the kind of moves that we've seen there. Let's talk about some of these with Parthiv Shah, director at TRACOM Stockbrokers, joins us right now on the show. Parthiv, as always, good having you. Thanks much for joining in. Parthiv, let's start off with what is arguably, to my mind, the biggest piece of news, both from a banking perspective and the telco perspective, which is a reiteration by the Department of Telecom that the telcos need to cough up the dues in 3 months. Now that it is cast in stone, what happens, one, to the telcos, and then do you reckon that the nervousness in the banks could be in part due to the stress in the telcos?
Good morning, Neeraj, and thank you for having me on your show. See, it's a horrible scenario in the telecom sector. And now I think what we have realized is what's going to happen is there are 3 major private telcos, Jio, Bharti Airtel and Vodafone Idea. And what's happening is out of these 3, Vodafone Idea is at such a level that they're going to have massive attrition of customers. And there's been huge deterioration in terms of its quality of service, especially because of the integration of its sites, because still the merger synergies are yet pending. They have to integrate the sites, and in that integration, a lot of call drops and a lot of quality of service is getting hampered, which is having a lot of attrition of Vodafone Idea customers into likes of Jio and Bharti Airtel. So I think this is a scenario where I think Bharti Airtel and Reliance Jio are becoming even stronger in only a 3-player market. And I think it's such a scenario where this 1.3 trillion rupees worth of liabilities which have come, I think does not bode well for the entire industry. Forget about talking even about investing in 5G. Even the 4G networks, the 4G LTE networks in our country are not up to the mark. And these companies have no ability at this juncture to reinvest in their business and innovate. So I think that's a sorry state of affairs in the telecom sector. But I think if I were to look in terms of which companies will come out of this problem, I think Bharti Airtel, if I were to look at it, and probably that's the key reason why the stock price has not massively corrected despite this 25-30,000 crore worth of liability that they'll have to shell out. They are still in a relatively better position in terms of their balance sheet to pay out this amount. And I think in case of Vodafone Idea, there's so much of uncertainty. There are even talks about the both promoters, the parents, not willing to pump in more money, and they're trying to find a new partner. I think it's a terrible mess out there, and I think the entire advantage of this mess at Vodafone Idea, and mind well, Vodafone Idea is almost a 30-32% market share in the entire telecom industry. A lot of attrition is going to happen, which is going to massively benefit Bharti Airtel and Reliance Jio in the longer horizon. So I think it's getting really bad in terms of the industry scenario, but I still believe that if at all there is any dips in Bharti Airtel, that is the stock to play out in the telecom sector.
What about the banks? Parthiv, yesterday there was some flutter there. I don't know, I mean, people cite various reasons, right? Traders need a reason. Could it be a combination of the Moody's outlook downgrade, the currency weakening, or maybe the fear about the telcos? What do you think is happening within an Axis and ICICI? All of them are coming off quite rapidly.
Yes, I think Neeraj, I would point out multiple reasons. First, if I were to look at the CPI data, the food inflation has started to inch up. The core data was horrible. So again, I think markets are slightly confused that maybe one more rate cut, after which probably the RBIs will stop. That is one part of the reason that maybe the bank did correct. Again, this telecom sector NPAs. I think one is penciling in that it's going to be again a huge liability for a lot of banks who have kind of, not only banks, I think some of the even good mutual funds have also given out a lot of money to these telcos, including likes of Vodafone Idea. So again, and what we are seeing is that the currency has started to depreciate. So I think these are the multiple reasons where we are seeing that, now the rally that these banks had enjoyed in the G-Secs might not play out, and rather it could be a mark-to-market loss going ahead if the GSEC yields were to go up. Even there are lots of doubts in terms of government's revenue garnering ability, and especially they have already admitted that the tax collections are going to be far below the estimates. So I think these are the key concerns that are putting, investors in the banking sector at bay at this juncture, and probably we are seeing some sort of profit taking and some sort of traders activity. So I'm not really bullish that the banking sector will now help the Nifty. So I think one will have to wait and watch and see what happens.
Okay, Parthiv, I also want to talk to you about some of the results. There is SpiceJet, Pidilite, Bata, and we'll talk about all of them. But first, let's go across to our research team to try and talk about some of these earnings. Remember, we've spoken about Pidilite already on First Word, so we'll talk about that, but there are some others which are important, some stocks in news as well, which we need to talk about. And Agam, Nikki, as well as Sameet joining to talk about that. Agam, let's start off with the key earnings first.
Right. Well, Neeraj, I'm going to start with, Bata India. Inline earnings coming through, revenues rose 7.5% and margins also expanded. But we must remember that because Bata has a lot of retail stores, their finance costs as well as depreciation impact goes high on account of Ind AS. So that's the reason why we are looking at such a big expansion as far as operating margins go. Revenue, however, is also on the back of a very high base, which is 15% last year. So on the whole, it's been fairly stable. Retail channels continues to grow, aided by premiumization. Moving on to SpiceJet, these earnings were below expectations. Revenues did rise 52%, but we also had a lot of challenges as far as operations are concerned. EBITDA loss at 54 crores against a loss of 44 crores. There was a strong top-line growth, but we saw yields worsen for the company, and the yields were lower on account of higher competition. And finally, coming down to Blue Star, we do have results which were above estimates. Revenues rose around 21%, margins also expanding by as much as 30 basis points to around 5.9%. The MAT credit reversal and higher other income did aid earnings, but we must also keep in mind that along with Blue Star, just yesterday we also had earnings from Symphony. A lot of these air conditioning companies are coming out with a reasonably stable set of numbers, and this will also shift back focus to the entire air conditioning space. On the whole, a steady set of numbers coming from Blue Star too.
Okay, we'll watch out. Well, the cooling solutions companies seem to be doing okay. Quick talks on the couple of names that are coming out in numbers. Let's start with Vedanta, Nikki.
Subdued set of quarters. Top line, we're actually expecting a decline coming in there. We're expecting a 13% decline there. It's essentially the lower realization and the weak volume performance, which is expected to weigh down on the earning performance of the company. EBITDA, we're expected to see a decline out there, 11% downtick. We're going to talk about the segmental performance of EBITDA later on, but margins for that matter, they're expected to remain stable around that 23-24% kind of a level. Profitability, that is expected to take a hit on year-on-year basis by as much as 49%. Of all the divisions that we have, Zinc India, Zinc International, Oil and Gas and Aluminium, these are the 3 or 4 major divisions contributing to Vedanta. They're expected to see a decline. Zinc on an international basis, EBITDA is expected to rise given the ramp up we're seeing in Gamsberg mine, but otherwise it's going to be a decline coming in for Oil and Gas and Aluminium. Zinc India has already reported numbers and there was a 9% downtick there on account of lower LME prices and volumes, which is pretty much the factor which is weighing down on all the earnings. And so is the case for power, steel, iron ore and copper. We might just see an uptick for iron ore division. Closure for copper division continues to weigh on the operational losses of the company. 2 things that we like to keep an eye out will be the cost commentary coming in and any Gamsberg ramp up of Gamsberg mine, which is a Zinc International business. We're going to watch out any developments on that.
Thanks for that, Nikki. Sameet, what about ONGC?
Sequentially, is expected to be a weak quarter. If you see the headline numbers, the revenues are expected to be down by nearly 7%. EBITDA could decline by nearly 13%. Margins could come in lower at 53%, while the net profit on the other side could be higher by nearly 6% to close to 6,300 crore rupees. Now, this is because the sequential is expected to be a weak quarter because of lower oil prices, and that's the reason the net realizations are also expected to come in at around $62 per barrel, as against $66 per barrel reported by the company in the last quarter. However, the company's net profit is expected to be higher because of a higher dividend income and the likely adoption of lower corporate tax rate in the second quarter. On the operation side, the crude oil production and sales number are expected to be higher, while the gas production and sales number are expected to be lower. Now, all these assumptions are based on the fact that the company will not have to bear any subsidy burden in the second quarter of financial year 2020. Now, key things to watch out for: firstly, the development plan of KG Basin of company, along with that any guidance on the capital expenditure and the production numbers, and lastly, any updates on the debt repayment related to HPCL funding would be important to watch out for ONGC earnings today. Okay, we'll watch out for all of these. Thanks a lot, all of you, for giving us those perspectives. Parthiv, your reaction on a couple of results, and then of course we'll talk about more. Blue Star, let's talk about some positives as well. Cooling solution companies are doing okay. Blue Star numbers looked okay too. Have you looked at them?
Yes, I think Neeraj, a decent set of numbers, and I think this is the case with this entire industry in terms of air conditions in the white goods space. I think they've been very resilient, and I think overall the sales number have been good, and even this gets verified with a company which is into contract manufacturing of air conditions, which is Ember Enterprises. And definitely in case of Blue Star, I think the numbers were kind of good, and the way they have managed the raw material prices and the gross margins, I think they have held up really well. But again, I think if I look into the valuations at this juncture, I think a lot of goodness seems to be priced into. We'll have to see, because now we are heading into like couple of quarters which seasonally will not be great in terms of air conditioned sales, and that is the point in time where I think these companies are always tested. So not very bullish at this juncture based on the valuations.
Not very bullish based on the valuations. What about the howler at Pidilite? Parthiv, actually not a howler really, but a disappointment at Pidilite. How do you think the markets will take it?
See, I would certainly rate it as a disappointment, Neeraj. The reason being, Pidilite tends to get this 50-55 price to earning multiple. The reason being, it is always considered to be a consumer-centric business. And if I look into the volume numbers, the consumer and the bazaar segment grew at nearly 1%. And I think the saving grace, ironically, this time was the industrial growth, which volumes were at 13%. So overall, I think these numbers don't really justify the current valuations. And even the lower raw material prices, the VAM prices, I think the management was slightly aggressive in terms of higher ad spends. Despite that, we didn't see a volume catch up. That is the niggling worry that one might have in a stock like Pidilite. We know for the fact that this is not a type of company where with one quarterly results, the stock is going to correct by 10-15% and we're going to get a great entry point. But I think this is not really very good in terms of this stock getting further re-rated. So my sense is that we'll have to keenly monitor even Q3 numbers. And if this trend of consumer and bazaar segment volume growth stays tepid or stays even below 3% volume growth, I think then probably we might land up seeing some sort of derating or at the best price correction, because I think definitely this stock in terms of valuations is not cheap, and with such numbers I think does not really justify such steep valuations.
Yeah, and that's why maybe, just maybe, we'll have a bit of a pullback in Pidilite in the session today. Parthiv, you tracked the specialty chemical space very closely. Yesterday we had a disappointment, or day before yesterday we had a disappointment from Vinati, and the stock duly corrected. Aarti has come out with numbers which are below estimates. We'll be talking to the management at 9:45, of course, but Aarti Industries numbers also left a bit to be desired. What's happening here?
See, I think, Neeraj, my sense is that we are coming out of a very strong base. And now, especially if I were to talk about Aarti Industries, a lot of their products, which are basically benzene derivatives, I think we've certainly seen a quarter-on-quarter price correction. And again, I think the demand is slightly erratic. Even the international export markets, I think they have not been extremely strong. And we know a company like Aarti Industry has a lot of sourcing happening to a lot of international global MNC plays. And when there is demand weakness from such players, I think it might not really bode extremely well for a huge uptick in terms of the volumes, and then that percolates in terms of entire numbers going down, especially operating leverage, etc. Yet, I think in terms of the margins, they have held up reasonably well. It's a great management, no two ways about it. But again, I think a couple of quarters, they might be struggling in terms of delivering numbers which can really beat the street.
Okay, so my question is, Parthiv, if you had holdings into any of these specialty chemical companies, okay, let's not say any, let's not brush all of them with the same brush, let's not paint all of them with the same brush. Vinati and Aarti, would you take some profits off the table, or would you be a believer and stay invested?
See, in case of Vinati, I think I would not mind taking profits, because again, the trends that we are seeing in terms of the weakness of the pricing in its key components, and more importantly the ABTS, where I think there is a proxy towards how the oil market behaves, I think there could be more weakness going ahead. But in case of Aarti Industries, we are more bullish. This is not a type of company where a couple of bad quarters could really derail things for them. They have, I think, a fantastic business model, and their strategy has always been having 5-6 specialty products, which is like acting as a hedge always, where even if 2 of the products land up picking up, I think the overall numbers look better. So I think I would rather be a buyer in Aarti Industries. If at all there is any dip based on these numbers, Aarti Industries, I would still want to give it next 3 to 5 years. I think this is a great proxy to play in terms of the chemical theme, the specialty chemical theme, and more importantly, a lot of MNC players are talking with such companies, asking them to build bigger scales than what they have right now, which gives more sustainability in terms of future cash flows for such companies.
Okay. Well, it's 8:50. Parthiv, stay on. It's 8:50. Time for our special segment, Bloomberg Edge, wherein Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Yash, what's the stock on your radar today?
Morning, Neeraj. So we are tracking Muthoot Finance, and there's a negative call coming on the counter. It has been under pressure for the last 7 trading sessions, and it has managed to cross below the crucial mark of the trender line. The trender, as you know, is a proprietary Bloomberg indicator, and it basically uses the average true range for the purpose of calculation. It also helps you manage your stop loss and generates a buy or a sell signal. When does it do so? Whenever the price moves above or below the mark of the trender on a closing basis, the trender manages to change its color. If it moves above the mark of the trender, it would flip to green, which is a buy signal, and vice versa. Now, coming back to the price chart of Muthoot Finance, the company did come out with its numbers yesterday, and there are concerns with respect to asset quality worsening. But take a look at how the price action has been. For the last 7 consecutive trading sessions, we've seen the stock end lower. In yesterday's day of trade 2, it was down nearly 3%, and with that, it has managed to break below the mark of the trender, which was at about 665.5. The stock closed around 650. Now, historically, every time this has happened, we've seen a further pressure coming onto the counter. So we'll have to wait and watch how the stock reacts.
And this has worked well in the past, I presume, Yash.
So 4 out of the last 5 times it has worked, Neeraj. 4 out of those 5 times when it has given a negative call, on a closing basis over the next 1 month period, it has fallen close to around 6-7%. We have seen the move come in prior to the results, and the results not being that great. Maybe not. It's already priced in, but we'll have to wait and watch.
Well, maybe fundamentally it might be priced in, if at all, and we don't know that. I'm not making a comment on that. I'll let Parthiv do that. But as per the trender indicator, there is more downside for Muthoot Finance, so do watch out for that stock. Well, thanks for that, Yash. And let's stick to charts for a bit. Abhijit Phatak, Director at Definedge Solutions, joins us on a very important day, the weekly options expiry and the kind of cuts that we had yesterday. Abhijit, good morning. Neeraj here. Thanks for joining in. What did you make of the gash yesterday, Abhijit? And does that lead you to take any fresh positions on the expiry day today?
Good morning, Neeraj. Yes, it might be due to expiry today. I mean, that is possible. Most of the times, especially in the last 3-4 weeks, we have seen the major action on the expiry is done on the Wednesdays. And more often than not, the Thursdays are silent, quiet. So maybe that is the case. And if that is the case, then I don't see much of downside. And 11,800, 11,850 should give us support. Of course, the Nifty futures is still weak as long as it is below 11,900. So it is safe only above 11,900. But I would be looking for some stability below this level near 850 or 800 and then still like to go long at these levels.
Wow, I'm glad you're saying that. So you're safely ruling out, at least on your part, initiating any fresh short positions on the Nifty or the Nifty Bank?
Maybe if it opens with a gap up near 11,900, because that is what SGX might suggest, it went up to 11,900. If it is not crossing 11,900 at open, maybe there might, and not crossing it decisively, maybe there might be a small intraday short back to yesterday's low. But I would look for some stabilizing around those lows up to 11,800 in the first couple of hours.
Okay. Abhijit, just a very quick view on a couple of private banks before we get to your ideas. Axis Bank and ICICI Bank, what do you reckon will happen here?
Although I gave a bullish view, both appear a bit weak to me in terms of ICICI Bank topping out for the short term, and ICICI Bank, as long as it is not crossing its previous high, and it might remain range bound. I'm not saying they are weak, but they might remain range bound within plus minus 2-3%. So I would not advise any fresh longs in those stocks.
Okay. What about your specific stocks, Abhijit?
Yeah, I have one long, in fact both longs. One is in HDFC Bank, which did not fall as much as some of the banks yesterday, so it might get a support near 1230, 1240. So with a stop loss of 1220, it can be bought for a target of 1280. And another one which did not buckle at all in the sell-off yesterday is Tata Motors. That appears quite bullish to me on any dip towards 168, 170. It can be bought with a stop loss below 165 and expecting 185, 190 levels, maybe this expiring.
Okay, we'll watch out for all of these names. Abhijit, stay on. So much more to talk about. The clutch of stocks which are moving around, and we need to discuss those as well. I think the very pertinent question, Parthiv, that comes in, and maybe even Abhijit can weigh in on this, but first to you, Parthiv, is whether the buying that we're seeing in HDFC, AMC can continue. Now, I know people might accuse me of talking about this stock every second day, and I wouldn't have, but for the big move that we saw in the second half of trade yesterday and ending about 8% higher, 3,600 rupees, Parthiv, would you buy more of HDFC AMC?
Neeraj, you're totally justified talking about this stock daily. The way it has, I think, delivered stellar returns. I think the IPO had come at 1,100 bucks, and ever since then, I think what we have seen in terms of the value creation that this entire group and this, especially this company, has done. Again, talking about valuations and comparable peers, etc. At this juncture, at 75,000 crore market cap, knowing that this is a cash generating machine, but generating somewhere around 1,000 crores every year in terms of profits, it's right now quoting at around 75 trail multiple. We know for the fact that this is an entire industry. I think even if I have to talk very long term, and the reason I have to talk very long term is because the current valuations are prohibitively expensive. This is an industry which is going to touch 100 lakh crores by 2030. HDFC has a market share currently of around 15-16%. Even if it were to retain that, and assuming that over the next 10 years, they were to be managing anywhere between 16 to 20 lakh crore worth of AUM, and still earn 30 basis points of their AUM as their profits, giving another 40 multiple. In the next 10 years, there is still upside of almost 2.5 times from here. For maybe not for Indian investors, that could be a very enticing returns, but for foreign institutional investors, over 10 years, their assets going up by 2.5 times is still very good. I think there have been some index flow related news and low float which has led to this rally. Not suggesting a new entry point here, but I think somebody holding it should not book out just because it has rallied massively. We know for the fact that such HDFC group stocks don't correct massively from their peaks as well. They might time correct. But I think this reinstates my thesis on even RNAM, which is a stock which we had discussed on your show at around 230, 240 levels. That I think this valuation gap, which is increased between RNAM, Nippon and HDFC AMC, justifies the fact that Nippon still has some legroom to go on in terms of the upside. So I think if one wants to play the AMC space at this juncture, would not suggest buying HDFC AMC at 75 multiple, but I think Nippon will be the company one should bet on.
Reliance Nippon Asset Management is something that Parthiv believes one can bet on. Abhijit, do you study the charts of either of these two names?
Yeah, I have observed HDFC AMC, and he also said, it's difficult to give a buy call at these levels because first of all, the stop loss is quite far off. It's below 3,200. But if anyone is holding it from lower levels, they should hold on. And as of now, the stop loss is 3,200 technically. And in a chart which is only in sky blue territory, it's difficult to give a buy call at these levels. But then hold on for the longs with the stop loss below 3,200.
Okay. Parthiv, quick chats. We are 2 minutes away from market open. 2 or 3 stocks that I very quickly want to mark. SpiceJet, the numbers. Disappointing enough for the stock to go down further or already in the price?
Very disappointing, Neeraj, and not only SpiceJet, even Interglobe Aviation at a point in time where the most important cost for these companies being fuel, I think, is at lows, and yet the yields are not coming up. I think certainly does not bode well for the industry. A lot of competition had also reduced, so one was expecting that the numbers and the yields should start looking up for the incumbent players, especially SpiceJet and Interglobe Aviation. But the operational costs have really escalated, does not bode well. So I think at this juncture, it's better to avoid this space.
Okay, L&T Technologies, there's a query coming in, Parthiv. I know you track that company.
We are very bullish on its long-term prospects. Maybe a couple of quarters might not really be extremely encouraging, but Neeraj, this is a type of a company where one will have to give time 2 to 3 years, and they're doing a lot of things in the engineering space, especially Internet of Things. They are connected with a lot of global MNC players where a lot of innovation is taking place, and a lot of that innovation, these global players are willing to outsource in a country like India where overall cost of innovations are a lot lower. And L&T Technologies is a type of company which can help a lot of its customers deliver that innovation. So we are very bullish on this theme and this concept.
Okay. Parthiv, stay on. So much more to talk about. Abhijit, stay on as well. Would want to talk about a couple of other large cap names as well, which held out yesterday. Remember, TCS and Reliance Industries did well. Maybe we'll ask Abhijit Phatak a view on a couple of those names too. But we are 20 seconds away from the pre-open session. Asia as a pocket is looking flattish to marginally weak, and range bound, you would have to say. Hang Seng was down about 1%, now just 0.75%. So it's not cracking under pressure. The SCX Nifty indicating a start which is marginally in the green. Let's wait and watch if it does perk up, and we'll keep an eye out on the currency. That's the big one, cracked below 72 yesterday. Let's see if there is more in store today. But here's how we're starting off. Flattish moves. Let's give these rates a chance to stabilize. The Nifty and the Sensex will be all over the place in the first few minutes. We'll try and talk about them a bit later on. Let's try and talk about specific stocks, 2 or 3 names that we should try and mark. Yes Bank, and that, you know, there is some more news flow around that one. It just keeps on gyrating to news flow every single day. Difficult to call this one. Telcos, Bharti Airtel and Vodafone Idea should come up on your screen, and this should be tough times. I don't know if there will be a 10% downtick on Bharti or no, but Vodafone Idea should certainly be weak and likely to continue to remain weak. So do watch out. This is the one where people are a lot more circumspect. Let's wait and watch what happens there. There aside, a clutch of names that came out with numbers, and those are the ones which are important to monitor too. So watch out for Pidilite, in all likelihood could be reacting. Watch out for Bata, in all likelihood could be reacting. And watch out for SpiceJet, in all likelihood could be reacting negatively. These 2 or 3 names that stand out to my mind. And then some movers from yesterday very quickly. Affle India, big move in trade yesterday, as also for AU Small Finance Bank and Chalet Hotels. And let's see if this uptick on these stocks continue. HDFC AMC remains the other one, which is top draw as far as movement goes. Let's wait and watch. All 3 starting off in the green, and HDFC AMC, my God, another 3%. Let's wait and watch if this lasts. We'll also watch out for RT Industries and a couple of others. But let's give these rates a chance to stabilize, and then we'll talk more about them. Abhijit, A slightly tough question. I don't quite know which way the telcos will open, but with an assumption that Bharti Airtel starts off lower, anywhere between 2% to 5% lower, if it does, is there a trade that you would initiate after open?
Actually, if you look at the long-term chart of Bharti, it is not as weak as maybe a stock like Idea, and it has been in a sort of a range, very broad range of 300 to 400. So anytime it dips near 320, 330, it gets bought, and anytime it goes above 380, 390, it gets sold off. So if it at all comes near 320, 330, it can be, one can think of buying it. Of course, the stop loss is a bit wide below 300, but if it opens flat, then definitely it is a short.
Okay, if it opens flat, then it's a short, but long-term charts indicate that it gets bought at some of the lower levels, and it's all over the place right now, Bharti Airtel. Let's wait and watch. I think the bulls will tell you that all of this is known news and nothing unknown, but maybe a small streak of the market was hoping that there will be some intervention by the government. That is what, remember, the conversations with analysts were as well, when the first time the news broke out that the government will intervene in some fashion or the other. For now, it doesn't seem like that is coming. Vodafone Idea has gone out and said that it's very disappointed with the verdict. Bharti is not reacting as much. Vodafone Idea, on the other hand, I reckon should be reacting. Bharti is okay. Vodafone Idea is clearly under some serious pressure right now, so do watch out for this one as well. What's happening on the index stocks? Not too much really. Infratel is down about 1% as well, and ICICI Bank is actually stabilizing about 1% and a quarter. Do watch out. Banks could have an interesting day. Abhijit Phatak, of course, mentioned that is a buy on HDFC Bank. Doesn't believe ICICI and Axis will have too much of a leeway. Abhijit, can I ask you about stronger NBFC? I don't know if you track Bajaj Finance. Has not been in the realms of conversation the last 3-4 days. Doesn't fall as much when the Nifty Bank falls, but rises very swiftly. Is there a trade here?
Sorry, I didn't get the name of the stock.
Bajaj Finance.
That is also appearing like it's correcting a bit. So at this level, it's a bit, maybe another 2-3% down, and then it can be a good long, but not at these levels. Maybe 3 to 4% dip from here.
Okay, we will watch out for Bajaj Finance as well in the session today. At the broader end of the spectrum, some stocks in the first few minutes of the pre-open session which seem to be reacting, aside of course, Vodafone Idea, are, well, the ADAG group, which had a tough day in trade yesterday. So Reliance Infra is looking like correcting another 4 or 5% in trade. Do watch out. And Nalco, which looks like starting off weaker or on the back of slightly iffy numbers. I'm sure Parthiv tracks Nalco. Parthiv, any thoughts here on the results?
I think tepid sets, Neeraj, and we know for the fact that alumina prices have come off a lot, whether you talk of quarter on quarter, year on year, and the demand even domestically has been extremely tepid. So I think despite the fact that this company has its own bauxite ores and own captive power plant, I think the current numbers don't really justify any sort of trigger in the company or in the stock. So we know for the fact that at one point in time, with the alumina prices being extremely up, I think there was a very positive momentum and cycle for Nalco. But again, we know these are cyclical plays, and current cycle looks like there's going to be more fall. So I think it's better to avoid discount at this point.
Okay. Sameet Chavan of Angel is also with us. Sameet, we were talking about stocks that are correcting thus far. We'll get to your index view as well, Sameet. But let's talk about stocks which are holding out. In yesterday's session, two large names held out, Reliance Industries and TCS. A view on either of them, Sameet?
See, clearly, as far as Reliance Industries is concerned, Neeraj, this has been one of the stock which has been giving gravity-defying moves, and there has been no stopping since last 3 years. This is the stock which has given multifold returns after a massive consolidation of nearly 8 to 9 years, and still, there is no stopping for this counter. This rally, may extend a bit, wherein on the higher side, 1500, 1520. These are the levels to watch out for. But trading this counter would be very difficult now, considering its gravity-defying moves. Yes, now 1420, which is the 20-day moving average as well, which has become a very strong support. And yesterday we saw good buying interest from that important key moving average. So from here on, this northward trajectory is likely to continue. Those who have bought it at lower level, they should now keep trimming. Their stop loss is higher. Now the important base is around 1420.
Okay. Sameet, what are the stocks that you're recommending in the session today for our viewers?
See, I think we would focus on mid-cap stocks. RBL Bank, within the banking space, yes, this has been a laggard. This has been one of the, underperformers over the past 8 to 10 months. But we believe that this stock is poised for some kind of relief move. In last 3 days, it has already given decent move, and yesterday we saw some mild profit booking. But we would interpret this as a good buying opportunity. Purely with a trading view, we are recommending this stock for a target of 362 can be bought with a stop loss around 319. And from the broader market, we like Tinplate, which has given decisive price and volume breakout on Monday. Yesterday again some mild profit booking, but the overall structure looks quite bullish. The volume activity in last couple of weeks risen substantially, so that provides some kind of credence to this recent rally. So we would interpret this as a good buying opportunity. Stock is poised for a good move. Initial target to watch out for would be around 150, but over the next couple of months we won't be surprised to see the stock heading towards 165, 168. Can be bought at current level with a stop somewhere around 127.
Wow, after a really long time, I'm seeing a call coming in on Tinplate. Very interesting. By the way, as the pre-open rates settle down, we are almost there. Bharti Infratel is the other one, which is starting off with a really big gash. Airtel doesn't have as much of a problem, but Bharti Infratel is now down and very, very close to 205. A trader-friendly stock of late, I must say, so keep that at the back of your mind. First question on the technicals to Abhijit Phatak. Abhijit, by any chance, any view on Bharti Infratel?
No, this has been a weak stock for quite some time, and there is no question of buying it at all, even at these levels, and I'm not sure where it will get a support, but maybe it might retest its previous low near 190, but if that breaks, then it has a further downside.
Fundamentally, Parthiv, if somebody has Infratel in the portfolio, get out of the stock?
Neeraj, probably the biggest problem that they are facing is one of the biggest customers, Idea Vodafone. I think they are a key contributor to a lot of their revenue, and again I think with their ability diminishing in terms of how the balance sheet is panning out, seriously there's a lot of concerns. No doubt, I think current levels and valuations does tend to discount in even a lot of revenue missed from such a huge customer, but a very tough call, and I think these assets will be valued higher going ahead, with the industry also growing whenever the other incumbents were to garner more market share. So incrementally their additional revenue would go to a company like Infratel. In tower space, we know it's a very concentrated market, only a couple of players. So it's a tough call. I mean, exit at this levels, I think it's at rock bottom valuations. Let's see how this company pans out over a couple of quarters. Then we can probably talk of an exit out.
Okay. Muthoot Finance is up 4.5%, so keep that stock at the back of your mind. And we'll also try and talk about some of the other financial names. Ujjivan Financial, there are a lot of queries around that. AU Small Finance Bank had a big move. We'll try and talk about some of these fundamentally as well. But we're just minutes away from market open, so let's tell our viewers all that they need to know to stay ahead in trade today. First up, telecom companies will be in focus after the department, the DOT, has asked operators to cough up their revenue share dues within 3 months. Both the stocks start off lower. A prolonged monsoon and liquidity crunch led to weak earnings for Pidilite Industries in the September quarter. SpiceJet reports a higher than estimated net loss in the September quarter due to high costs and higher forex losses. Aurobindo Pharma's Hyderabad plant has received a Form 483 with 14 observations from the US FDA. Veteran investor Radhakrishnan Damani has acquired 1.75% stake in VST Industries at 4,260 rupees per share. And lastly, ONGC, Vedanta, Bharti Airtel and Grasim will be the 4 nifty companies that will be reporting their second quarter numbers today. To watch out, the clutch of names which could be interesting in the session today. Muthoot Finance starting off 4.5% higher. The numbers seem to be half decent. Parthiv, did you have a chance to look at Muthoot Finance numbers? And a follow-up very quickly on Ujjivan Small Finance Bank, or Ujjivan as it stands. Would you be a buyer?
See, I think in terms of Muthoot, I think the reason why we're seeing this rally and decent numbers is we know for the fact that the gold prices have been up, and a lot of analysts are penciling in around 20% AUM growth for Muthoot Finance and giving it even a 2 times FY21 price to book multiple, I think does tend to justify the current level of the stock. Not that I think we are aspiring to buy out this stock in terms of a long-term investment thesis, because again, we are not very confident on a business model in NBFC where it's solely dependent on gold loans. I think we prefer more diversification. So I think that's where we would avoid Muthoot Finance. Even in terms of OG1, I think very frankly speaking, Neeraj, when I think there are so many other private sector banks which are quoting at very reasonable valuations and whose growth prospects are looking a lot better, the retail loan segments are contributing a lot higher in terms of the yields, we would not want to risk out into a name like OG1.
Okay. Parthiv doesn't want to risk it on a name like Ujjivan Financial Services. Well, it is telcos all the way in terms of the talking point for the morning. Vedanta is actually starting off okay despite the ADR cracking big time in trade yesterday. Maybe that was a follow-on effect to what happened to the stock in the session yesterday. And from amongst the stocks which are doing well, because everything is not all that bad, ICICI Bank is putting up a brave face, up about 1% after the cuts that we saw. It was a top contributor on the downside yesterday. It's up about a couple of percent. Z is up about 0.6%, so that is not doing badly. And HDFC Bank, I think Abhijit Phatak's idea is up about 0.5% at 1263. So do watch out for each of these names. Parthiv, 1 minute, one stock recommendation from your end.
See, Neeraj, I think we've discussed a lot of stocks in the past, and I would just quickly request your time for reviewing them. I think we talked about names like Alkyl Amines, HDFC Limited, Berger Paints. A lot of these stocks have done extremely well. I still believe that instead of trying to find new ideas, I think it's better to stick with the winners. And again, I would like to come back on my comment on a stock like Berger Paints, which from its recent highs has corrected a lot. And again, at around levels of 470 gives very good entry points. We are very bullish on this industry. And the second largest player, which is Berger Paints, is going to grow over the next 5, 7, 10 years. So why not play out this theme? It's a winning stock and the company is doing all the right things operationally, as and when they are scaling, they're even improving their return ratios. Yes, there might be volume growth concerns over the next couple of quarters. But again, once the economy picks up, I think these are the type of stocks which are going to be very resilient and going to take a lot of unorganized market share. So we've always liked Asian Paints, but Berger Paints from here, I think we feel that over the next 5 years can be a very decent compound in the portfolio.
Okay, at these valuations too, Parthiv is comfortable putting money into Berger Paints as a compounder for the next few years. Keep that at the back of your mind. He's got a long-term view in mind. You got to be careful. You got to be mindful of that, not careful of that, mindful of that. Thanks for that, Parthiv. Completely fine to reiterate an idea as well. Let's talk about top ideas from both our experts. We have less than a minute left for the markets to kickstart trade. Abhijit, to you first. Your top call for the morning.
For me, it is Tata Motors. If it does not break below 168, 165, it is a buy, and at least 175 maybe intraday and 185, 190 this expiry.
If it doesn't crack, long on Tata Motors. Sameet, what about you? Your top call.
I'll go with Tinplate, looks good, poised for a good move. 127 would be the stop loss and target to watch out for 150.
Okay, Tinplate it is from Sameet Chavan's hand. Abhijit as well as Parthiv. Gentlemen, we'll let you go on that note. Thanks much for taking the time out and being with us. Sameet, stay on. We'll just take in your index opinion post market starting off. About 8 seconds left for the markets to kickstart trade. We'll have a start which is marginally in the green. The question is, can we hold on to that? But here's the first rates this Thursday morning. And starting off in the green, about 13 odd points for the Nifty, 67 points up for the Sensex, 0.16% or 0.1% for the Sensex, and the Nifty Bank is absolutely flat, bobbing between the red and the green, just 7 points or 14 odd points, so hardly any moves on the large cap indices. The mid cap indices should also come up on your screen. I guess that they would be flat too. Doubt that there'll be too much of a change. Yeah, about 0.25% in the green for both the BSE mid cap and the BSE Nifty mid cap and the BSE small cap indices. Quickly get the heat map up on the screen then, and let's show you what's moving and what's not. So on the gaining side, we have Eicher Motors up about 1%. ICICI Bank is up about 1%. Z recovers a little bit from the body blow yesterday, up about 0.8%. Maruti marginally higher. Titan is slightly higher. Asian Paints is slightly higher. And Reliance Industries and TCS, the top two performers of yesterday's session, are holding out. What is not doing well? Bharti Infratel down about 6%. Bharti Airtel down about a couple of percentage points, 2.37%. IndusInd Bank 2%. Grasim about 1.5%. Tata Motors down about 1%. So those are the set of names that are not looking all that strong in the session today. It's slightly wobbly for the telcos in particular and Bharti Infratel in particular taking it on the chin, the top loser on the index today. Let's try and nail it down to a few stocks at the broader end of the spectrum. Companies that are in news today have come out with results and therefore could be reacting. As I said, telcos remain top down while Bharti Airtel is doing what it is doing. Vodafone Idea is the principal loser, down about 9.5%. So Vodafone and Bharti Infratel are the top losers because of the DOT statement. Pay up, says the DOT. Yes, indeed. And the stocks are paying up as well. Weak results for these names. Pidilite, Aarti as well as SpiceJet, and SpiceJet starts off 6% lower. The yields substantially lower than what was estimated, and therefore this stock having a big gash in the session today. What about some of the others? Companies that came out with, well, a reasonable set of numbers. RITES, good numbers, strong numbers, up about 3% Blue Star, another 3%, and good numbers from all the cooling solution companies, by the way. And Muthoot Finance too, up about 3.5% higher. So the trender indicator showing that fall, but maybe fundamentally it's already absorbed the bad news or whatever, the slight wrinkles in the results, and is doing okay right now. Last but not the least, stocks that have been doing very well in the last few days, AU, and especially in yesterday's session. So Chalet Hotels continues to rise and shine at fresh life eyes for itself. Affle India and AU Small Finance Bank correct a little bit in the session, but still seem to be doing okay. I dare say I'll also watch out for HDFC AMC. But opening thoughts from Sameet Chavan before we let him go. Sameet, what's your index strategy? We are starting off very, very flat after the deep gash yesterday. It's the options expiry day too. What would be a call on either the Nifty or the Nifty Bank? What's the strategy?
See, I think as far as index is concerned, on Nifty we have seen a relentless move after seeing a swing low of 11,100 without any major correction. So the market is experiencing some kind of time-wise correction. It had to either undergo a price-wise correction or time-wise correction. So it has chosen to go time-wise correction. So this time-wise correction might continue before unfolding next leg of the rally. But we believe that the bias should remain positive. Individual stocks are doing well. Individual themes are doing well since last couple of weeks, so one should focus more on that. As far as index is concerned, 11,800 for the day, we expect to become a very strong support. So this current dip which is happening should be interpreted as a good buying opportunity, and probably in next couple of days we would expect Nifty reclaiming 11,900, 11,950. So our bias remains positive. A dip 20-25 points from current level would be a good buying opportunity.
Okay, well, thanks a lot for that, Sameet, for joining in today and giving us your thoughts. Joining us now in the studio to talk about his thoughts on the fundamentals of the markets currently is Pramod Gubbi, founder of Marcellus Investment Managers. Pramod, so good having you. Thanks so much for joining in. I know you guys are largely bottom-up players, but I just wanted to take a quick perspective, Pramod, because of your past and having dealt with so many global fund managers. Just wondering, with all that's happening around, do you reckon that flows could be an issue, or is it because of the flows that the valuations are not an issue currently?
Well, I mean, I don't think you can make a call on the valuation based on the flows. Flows we know can be quite, slippery in the sense it doesn't take much for the flows to reverse. We saw that massive U-turn around last Christmas, New Year, when things were looking quite awry, and suddenly one statement by the Fed and the whole thing turned around. So I don't think you can make an investment decision based on flows, particularly in this day and age, given we're literally living in uncharted territory. These are quite unprecedented times, which have been driven by quantitative easing or the cheap cost of money for as long as 10 years now. So we'll go back to fundamentals. What are we seeing in fundamentals? And I think we've had a fairly prolonged slowdown, and we continue to be in the middle of a slowdown. Are we seeing a recovery, signs of recovery? I think at some stage you will see the cycle recovering, because partly in this set of results itself, we've seen some statistical numbers, given that we're almost 12 months into this slowdown. You will see the month-on-month, or so rather the year-on-year numbers starting to recover. But I think there are expectations that some of the steps taken by the government will percolate down to sentiment, and that sentiment will result in some investment decisions being made by the corporates, and hopefully that will trigger the cyclical up move at some stage. And that hope is what seems to be driving stock prices as of now.
I wonder if you would alter your portfolio positioning based on that hope as well? A cyclical uptick and then maybe some of the cyclical stocks coming up, or would you still be sticking to what's worked beautifully for you thus far?
Yeah, I mean, like you said, we largely bottom up. We look for, of course, clean governance and accounting as the first set of the filters. Secondly, we look for companies who make goods and services which are essential to its customers, whether it's a B2B customer or a B2C customer. It has to be an essential product where the revenue volatility is bare minimum. And thirdly, we look for companies which are quite monopolistic in their competitive position, and hence the profitability or the profit margin variance is quite minimal. Now, it could be in cyclical stocks, it could be in sort of secular sectors. It doesn't matter, but we're quite happy with our portfolio as of now. We are keeping an eye on if there are other new names which come up on the radar which tick these three boxes. And we're quite open to having a look at them, but at this stage... there
would be some top-down approach to which themes would do well, and then you would choose the company thereof. I mean, I'm just wondering if there are any cyclical themes wherein you started looking at them, and then you would choose the stock based on a bottom-up theory. Anything out there in that radar?
Not really. I think we still use filters. The filters are fairly quantitative in nature. Okay. As long as those filters pass those companies, which eventually it will, if we see a period of performance, fundamental performance from those companies, certainly they'll start passing those filters and come up on our radar. But we ourselves don't approach it from a top-down thematic perspective.
Okay. Let me try and ask you a few top-down questions, though, because we've spoken about some of our portfolio companies in the past. I wanted your view on what would you do with some of the companies that are, or some of the spaces that are getting hammered out of shape. Would you reckon that any telco would be good at a price, or because of this whole price war and the gruesome nature of the business right now, it's a comfortable avoid? What's your thought out here?
Yeah, I'll give you our perspective. From our perspective, it is a comfortable avoid because we look for long track records of stability, and not so much on sort of a recovery story or a deep value play. But even otherwise, even if we were to take a more objective look at this sector, I reckon there's still a lot of moving parts. We still don't know what is the business model for this sector, right? We used to think tariffs, then we used to think there is an overlay of services which will be monetized to justify the sort of spectrum cost and the network cost. Even that we haven't seen pan out yet. So, and now the hope was consolidation. Now we're down to 3 players, and hopefully those 3 players will behave in a way that profitability emerges back into the sector. That also doesn't seem to be panning out, and finally the government doesn't seem to relent in terms of the costs imposed on this sector. So too many moving parts for us to take a call, at least for us. I don't know about the others, so we'll be happy to watch it from the sidelines.
Okay. A pocket of stocks that seem to have done well despite the unseasonal rains is Cooling Solutions. Symphony, Blue Star, Voltas numbers weren't all that bad either. Now, what's happening here? Do you have any thoughts on this pocket? And could these be money spinners or wealth creators in the times to come?
Well, again, I wouldn't look at it from a top-down perspective, but most of the names that you mentioned are solid names when it comes to competitive advantages, both in terms of brand and distribution, built over several years and decades. There was a time when people used to think that given social media, it's fairly easy to build a brand, and given the likes of Amazon and Flipkart, you can literally import stuff from China or Taiwan, put it up on these platforms and get national distribution overnight. But I think these companies have demonstrated that the age-old way of building distribution is still stood still. But I think it's not going to be that easy again. So we are quite positive on these names, but I'm not sure we will completely disregard the threat of e-commerce as a disruptive force in these sectors.
Okay. Well, speaking of e-commerce, I think this whole fanfare around internet-based businesses is really coming to the fore. I mean, previously we only had, well, in a manner of speaking, InfoEdge as that internet or new age business. Now a clutch of other names have come in. Affle is doing well. A clutch of other new names have come in. Any thoughts on any companies that you may have studied? I'm not looking for a call out here, but just wondering if you like a business model of any of these.
Yeah, we do own InfoEdge, for example, in our portfolios and some of our portfolios, and I think it's sad that we don't have too many companies in the listed space which give us the option. But having said that, I think we're still at very nascent stage as far as e-commerce in our country. At this stage, you obviously go through the hype cycle. Several names come in, only few tend to last, and we're happy to sit out this phase where happy to see which ones can build sustainable competitive advantages over the long term. At this stage, remember, there's still a lot of easy money floating in, and hence the biggest entry barrier hasn't been erected yet. With capital coming in, there's plenty of new entrants coming in. So as long as that remains, I don't think this space will remain, you can call it that some of them have a sustainable competitive advantage in the face of competitive entry.
Yeah, okay. I was just wondering if by any chance you would have taken a look at the business model of, say, for example, an Affle or some of the others, because they've just got the fancy of investors right now. The other pocket, Pramod, and at the cost of sounding like a broken record, but the kind of money that the asset management and the wealth management businesses, the stocks are generating. IIFL Wealth, a recent listing, doing extremely well, and a good business model. But I'm just saying the kind of money that it's attracting. HDFC AMC is up another 3% today at $3,700. I mean, the kind of valuations that these stocks are trading at. You believe in quality, you believe in sustainable business models and track record and brands, but I'm presuming you believe in the value that you pay as well. Or do you think the market is right in ascribing these valuations to these companies?
Well, I can't comment on these specific companies. We own neither of them. But I think one positive trend for this sector is clearly this shift away from physical savings to financial savings. I think this is clearly a structural trend, particularly the install base. Right now, the shift we are seeing is the incremental flow. People are not putting money in real estate or gold anymore. All that money is coming into physical financial assets, particularly mutual funds, asset management products, and so on. But the installed base of wealth, which is the stock value, which is a significantly larger multiple, is still largely stuck in real estate and gold. And once we see that moving, the growth runway for some of these companies can be quite...
You guys see that? I mean, because you go to a lot of tier 2, tier 3 towns as well. Are people doing that, shifting money out of real estate, gold into financial assets?
Yeah, like I said, today's profits an SME businessman generates, obviously he's parking largely in financial assets. Or today's salary or savings that a salaried individual, he's putting more money in financial assets. But whether he's selling his current real estate holdings and moving that to financial assets, that isn't happening yet.
But that could happen.
That could happen if we see a sustained slowdown in real estate, and this affinity that we have as Indians towards real estate as an asset class from an investment perspective. As that sort of dies down, or rather curbs gradually, you will see this sort of flows into financial assets growing much faster, which means that the growth runway for some of these businesses, particularly in asset management, wealth management, can be quite long. Having said that, we do factor in valuations. We do believe that everything has a price. At every, value investing means that you have to buy it at a price which is significantly below its intrinsic value with a margin of safety. The question is, how do you arrive at this intrinsic value? We don't think PE multiples have the ability to do justice to the intrinsic value of such companies, especially with such longer growth runway and sustainable growth runway. Some of the companies you mentioned are fabulous franchises, and hence, despite new competition coming into these industries, they're able to, position themselves to sustain their current growth levels for much long periods of time, which we don't think the PE multiple can capture. Having said that, we don't own either of these stocks, so I'm not particularly sure if they're over or under their intrinsic values just yet.
Okay. One last question. I saw when Saurabh was here, he mentioned about the 3 financial names. Actually, no, not Saurabh, really. The note that you guys wrote spoke about the 3 financial names that you own, right? Which is the 2 banks and 1 large NBFC. My question is, what's the case for either betting on or rejecting the other set of private sector banks which have now generated some wealth? Their numbers are showing some bit of return to confidence of sorts, the Axis, ICICI banks of the world. What's the investment thesis or no investment thesis there?
Well, I do recognize, we do recognize, in fact, we own Axis Bank in some of our portfolios.
Oh, you do? Okay.
But yeah, but look, without having a negative case against them, we can still be happy with what we don't have to own the whole market to generate returns. It's more of a relative
sell-side hat and tell me what do you think of these?
No, I think in Axis's case, we're clearly seeing improvements on the ground. In any case, the franchise was particularly strong, particularly on the liability side, even the operating structure. I think it did go through a bad phase in terms of asset selection and the lending behavior, which hopefully is pretty much behind them now. I'm sure there'll be a few more surprises on the asset quality, but nothing of the order that we've seen over the last 5-6 years. So with the worst behind them, with a new management in place, with lots of positive changes, I think it's definitely worth one keeping on the radar. Same with ICICI, it has gone through a management change itself, although we don't own it. But definitely worth keeping on the radar because these are very powerful franchises when it comes to liabilities. All of them have very strong CASA franchises. If they can, figure out the asset side, I think they can deliver sustainable value.
One last question, Pramod, and that is on a sector that everybody says they would play as a proxy to infrastructure, and that is cement. Now, the reason why I'm intrigued about this is that as much as we think of India being an infrastructure-starved country and they're being spent there, the last, I don't know how many years now, cement has failed to generate any kind of wealth, and yet every year you hear bull calls coming on cement. There have been an odd exception or two, but largely they've not been wealth generators. If anything, they've been wealth destroyers, large proportion, say for one or two like Shree, etc., etc. Yeah. Is there merit in trying to own them? Because people typically compare them to their historic EV per ton valuations and say that these are cheap. But I fear that that might not be the right way to value them anymore.
I think the past experience, the way you described, gives you the answer. I mean, like most other sectors, this has to be bottom up. Of course, there are the good names. Cement has certain positives going for it. It is a protected industry in some ways because you can't have imports. And we've seen through a phase of consolidation as well, right? So there have been poor cement companies which have been acquired by the stronger ones. There haven't been a capacity build-up seen again. So there will be a time when demand will catch up with supply, pricing will improve. But I would still think that you're better off playing it the bottom-up way, choose the couple of names which have done well in the past, which have demonstrated significant efficiencies on the manufacturing and operating side. Because remember, at the end of the day, it's still a commodity.
Yeah.
If you have efficiencies on the cost side, you will remain competitive in the marketplace. And with an overlay of brand and distribution, I think you can generate significantly high ROCs even in this commoditized sector.
Yeah, well, so very, very bottoms up, I reckon, is what Pramod is trying to say. Pramod, great chatting with you as always. Thanks much for taking the time out and being with us today. Well, that's Marcellus, and they've done remarkably well. I urge viewers to log on to our website and try and read the latest piece of the last month, which speaks about portfolio managers by Sajid. And it tells with quite a bit of detail about what some of these have done. As we hit the break, keep in mind, Bharti Infratel is down about 8% and Airtel is down about 3%. And stocks like IndianOpen Bank and Britannia too are correcting. So those are the names that you got to monitor. But stay tuned. Coming up on the other side, we discuss earnings with MS Unikrishna of Thermax and Rajendra Gogri of Aarti Industries.